Hey, what's up, guys? Welcome to another training session. My bad, guys, for starting the session just a little bit late. It's just a few minutes late. I was actually wrapping up on my TikTok live stream. I was live on TikTok. And yeah, guys, let's just get started with today's training. So basically, I saw the economic calendar. So today there's not really much um, in terms of high impact news events. Okay, so I just thought that we can just take this opportunity just to share some information and some insight, right? And then also maybe just look at a few trading opportunities after that. So this session is probably going to be about 30 minutes long, maybe 45 minutes long, depending on the feel of things, right? Yes, so the purpose of today is to just to share some information related to trading, also to just see what potential opportunities we can have right now, or to see if there's any potential opportunities for tomorrow. Okay, so we're going to be live streaming tomorrow again around the same time, around 7 p.m., because there's going to be a high impact news event that's going to happen at 8. All right. I'm even tempted to do the live session an hour earlier, like at 6, because of how crazy the market's going to go. So it's the FOMC, guys. FOMC is one of the most powerful Forex news events that affects the USD. Okay. It's something that you cannot ignore, guys. It's like NFP. You can't be a trader and you ignore NFP. That it doesn't make sense, guys. It doesn't make sense. So you can't do that, right? So the news events to look out for is the NFP, which happens on the first Friday of every month, of every new month. And then there's also the FOMC, which is the Federal Reserve chairperson talking about the economy, blah, 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 blah. That has a huge effect on how the US dollar performs. And then things like CPI, the president speaking, if there's like a president speaking of whatever nation, European nation, or president in the US nations, right, or the American nations, then that's something that can affect the news. I mean, that's something that can affect the currencies, right? So just keep an eye on that, okay? So, anyways, there's two things that I want to just talk about just before we look at the charts, guys. There's just two things that I want to talk about. Number one is understanding the market. Let's just write it on our screen. Understanding the market, okay? This is very important, guys, right? Because what I've seen is a lot of people don't really understand, or they don't really take the time to understand how the forex market actually works. Okay, and this leads to them having really different expectations about what they see in the markets. They end up having a false expectation of the markets because they just don't understand what's happening. Okay, and then they constantly lose and things like that. So we are trying to change that, right, by helping us understand the market. Okay, so let's just talk about a few basic things, guys. Okay, I know you guys are in a rush, but don't be in a rush today, guys. The purpose of today is just to share information. It's not really to find trades, but we are, when I'm done here, this is probably going to take like 20 minutes. We are probably going to um we are going to look for trades, but for now, guys, don't rush for that. Let's do this part first. Okay, so guys, we're trying to understand the market right now. Okay, and we need to, in order for us to become successful traders, okay, we need to get acquainted with how the market moves, right? The behavior that the market makes is something that we need to get used to, guys. Just hold on, guys. Just want to respond to a message. I'm so sorry. But don't be in a rush today, guys, okay? If you're in a rush or if you don't have much time, you can. just log off and maybe come back at 20 past 7 in about 10 minutes or 15 minutes, where we're going to be looking at the charts. Okay, but for now we're just going to be what do you call this, we're just going to be sharing some important information, right? Okay, I'm almost done with my message. Okay, where was I? So in order to um, be successful in trading, guys, we need to have a basic understanding of the markets, the markets. Okay, we need to understand how the markets work, right? We need to understand how the markets move, okay? Because now, if you don't understand how the market moves, guys, you're really gonna be you're really gonna be frustrated. Like I ain't gonna lie, you're gonna be frustrated, um, because you won't be satisfied with what's happening. Okay, so it's very important to understand how the market moves, right? So right, let's look at it like this, guys. Let's start. Okay, how does the market move? Okay, if you look at the forex market, right, mostly what you're going to be seeing is, or what you're going to be looking at, is a chart. Okay, a graph basically, where you'll see, and the graph represents the price, right, the market price. Okay, and the market price goes up and down, something like this. Okay, you'll see this when you're looking at the markets, right? The market will go up, it'll go down, it'll go up, it'll go down. Okay, and then you as a trader, guys, you need to see where you fit in. Okay, so the market has two directions. It either goes up or it goes down. I'm just trying to keep this as basic as I can. Okay, and then when the market goes up, guys, that's when we look to open up buy trades. All right, and then when the market goes down, that's when we look for sell trades. Okay, that's very easy, right? So you've got two buttons. You've got a buy button, right? You press the buy button when you think the market is going to go up, right? And then you press the sell button when you think the market is going to go down. Okay, that's basically how it is, okay? And then if we just look at this a bit deeper, right? What happens? So let's say for a buy situation, right? For a buy situation, let me just circle this, right? Let's say now the market has been moving up and down, and it reaches this point right here, okay? And then that's where you want to open up your trade. So let's say you open up your trade and you open up a buy, right? You open up a buy right there. If the price from when you open up the trade, if it goes up, that's when your trade starts making money, right? That's the positive side. So when we're opening up a buy trade, we are hoping that the price goes up so that we can make a profit. Okay, but then if it doesn't go up and it goes the opposite direction, right, then that's when we start losing money. Guys, I can't believe my phone battery just died on me. Just hold on. Just want to see if I can't get my charger. I really can't believe this. My phone battery just died on me. And my phone was busy telling me that, the battery's dead, the battery's dead. I just didn't understand. But anyway, let's just keep going. So, if the price goes up, you make a profit in a buy trade. If it goes down, you make a loss. Okay? Very easy to understand. This is very easy, guys. You guys are very smart. You guys know this already. Okay? So, what about a sell situation? Okay? In a sell situation, let's say you've got the same scenario, the market is going up and down, and then at some point you want to open up your sell trade. Okay, let's say you want to open up your sell trade right there. The sell trade, if the market now goes down, right, that's what we want. When you've got your sell trade, you'll start making profit. Okay, that's what you want. So when you're selling, you want the market to go down because that's when you're going to make a profit. Okay, but if you open up a sell trade and the market goes in the opposite direction, that's when you start losing money. Okay, So that's the basic premise of trading, right? When you're looking at the price chart, we want to open up trades, and our trades should be in line with where we want the market to go to, right? So you buy when you think the market's going up, you sell when you think the market's going down, right? Good. Now, um, if we now look at the market, right? Okay, I'm just gonna try to keep this simple, guys. Okay, so if we look at the market, okay, and we really analyze it, we can see that the market moves in a zigzag type of fashion, you know. So when I say zigzag, it doesn't move in a straight line like that, okay, when it's going up, and it doesn't move in a straight line when it goes down, right? So let's look at a situation where the market now is going up. Let's look at this situation when it's going up. So how does it go up? Okay. So please try stay with me here. Okay. I don't want to lose you guys. I don't want to lose you. We've come so far, guys. Okay. So the market now, when it's moving up, it'll do a series of three movements, right? If you really analyze the market like this, it'll make a series of three movements, right? It'll make a series of three movements like this, okay? So when the market is moving up, it has three movements. There's going to be this one, this push to the upside, there's going to be this push to the downside, and then this push to the upside again. So if the market's going up, so you're going to have this first move, this second move, and then this third move, right? So this is the basic anatomy of how the market moves when it's going up, okay? So that first move, that first initial move, okay, we call this the impulsive movement, right? So the impulse movement is a fast movement in the upward or downward direction. So in this particular instance, it's a, a movement to the upside, okay? Right? So this gets a lot of traders' attention, right? So a lot of traders start to open up buys when they see the first move, which is good as well, right? It's also good, right? It's good because that's where the market is going. But now, what people miss is that there's a second move, and this movement is a brief movement in the opposite direction. We call this the pullback, the retracement, or the correction. Okay? So now, people who don't understand this, when the market is making a pullback, it doesn't mean that the initial direction is wrong. It just means that the market is making a pullback, okay? So some people, they start to panic. They start to panic when they see the market moving in a pullback, okay? They think that the market now is changing direction. So what traders who don't have knowledge about trading do is they close their initial trades, and then they start trading in the opposite direction. And then what happens afterwards is the third movement, which is the continuation movement, right? It's continuing the initial movement. And then when they see this, that's when they start losing money. You see, guys, this is where I say it's important to understand the markets. You see, you can't be trading the markets and you don't know this. Okay, it's very important for you to understand this. Okay, so there's the impulse, there's the pullback, and then there's the continuation. Okay, you guys get what I'm saying, right? The impulse, pullback, continuation. I'll probably make more videos about this so you guys can understand it, right? I know some people won't really understand this in the beginning, but this it forms part, like if you want to trade with any trading strategy or even our Forex 3.0 trading system, these are some of the things that you need to understand because they'll help you when you are executing trades, okay, to have that insight, right? So we've got the first move, the retracement, and the continuation, right? It's also the same, it's the same thing, guys, when we look at when the market is going down now, right? Let me just get this. When the market is going down, you have the same situation where you have the impulse, right? And then you have the pullback, right? Right? And then let's do which color? Let's do green, right? And then you have the continuation. Okay? This is how the market moves on a zigzag. It's made up of these three movements. Okay? It'll make sense soon, guys. It'll trust me. Right? You've got the first move, you've got the second move, and then you've got the third move, right? That's how the market moves. It's the impulsive movement, it's the pullback, it's the continuation. Right? So if you're in an impulsive movement, guys, one thing you need to be very careful of is you can't put too much risk on the initial move because there'll always be a pullback. The market 100% of the time is going to pull back. Okay? Don't be like these traders that don't know. Okay? So you've got your initial move, impulse, pullback, continuation. Right? That's how the market moves. Right. So let's take it another step further. Okay? Let's take it another step further. Okay? So now we looked at we're just taking baby steps, guys. We looked at okay, Ash, I think I'm running out of time. Okay, let's just push it for another 10 minutes, guys. We'll do some analysis. Let's say 15 minutes, right? Let's say 15 minutes. Whether I'm done or not, we'll do analysis in 15 minutes, right? So let's say, for instance, guys, you have okay, we spoke about the market, how it moves. It moves up and down. We spoke about the zigzag, that the market moves in a zigzag, and then how it looks on a micro scale when it's moving up and down. Okay, so now another thing I want to bring to your attention, guys, is there's three types of movements, okay, or three trends, right, or three conditions that the price can be in. Okay, you guys already know this, but I'm going to tell you again anyway. Okay, so the first condition is an uptrend. Let's use one word, uptrend. Okay, uptrend. Okay, an uptrend is when the market is moving up consistently, just like that. Okay, it's making higher highs and higher lows. Guys, get me? And then in an uptrend, you want to be looking for buy trades. Why do you want to be looking for buy trades? Because the market overall direction is to the upside. Okay, so if you're in a buy trade, there's a higher probability that your trades are going to make a profit because the the overall price is going up. Okay, so that's why in an uptrend you want to look for buy signals. Okay, so when we're doing analysis with our trading system and we see buy signals. Okay, the signals that we want is an uptrend. Okay, a buy signal in an uptrend. That's what we want. That's the best scenario. You see, like what happened on US 30 on Friday and NAS 100 on Friday. That was an uptrend. Okay, that's why that trade was so profitable, right? And then the next type of movement is the what? The downtrend. Let's use one word. Let's make it one word. Downtrend. Downtrend. Okay? What happens in a downtrend? A downtrend is when the market now is making consistent movements to the downside like this. Okay? And what do you want to do in a downtrend? You want to look for sell opportunities, or you want to look for sell signals or sell trades, right? Or bearish signals in a downtrend because the overall direction is down, and then there's a higher probability for your trades to become profitable because you're trading in the direction of the market. Okay, and then um, the last type of movement, or the third movement, is a sideways trend, right? A sideways trend is something like this. It's when the market or the price is moving in between a support and a resistance. Okay, a support and a resistance, a range, right? So you guys already know that a support is sort of like the bottom floor of the market, right? Is the floor of the market, right? Or the price. And then the resistance is the ceiling of the market. You guys see that? So in a sideways market, the price isn't making consistent higher points and it's not making consistent lower points, but it's moving in between two levels. Okay? It can be a horizontal level, it can be an incline level or a decline level. But the point is, the market is moving in between two levels that we can clearly see, right? As you guys can see in my example right now, let's use another color. You can see that the market started here, it went up, came back down, went down, came back here, went like this. Okay, so it's not escaping these two levels right here. Okay, so now in this situation, we look for buy trades when the price reaches the bottom of the range, or when the market reaches the support level. Okay, just like there where I'm highlighting right there, trying to make this simple, right? Okay, and then we look for sell trades when the market now reaches the, let's see, let's use yellow, when it reaches the top of the range. Are you guys with me? So you've got uptrend, you've got downtrend, and then you've got sideways trend. Okay, so you sell at the top of the range and then you buy at the bottom of the range. This is like under general, okay? Generally speaking, right? That's how you trade these particular conditions, okay? So now somebody else might be asking me, okay, so Praise, you're telling me about these market conditions, right? You're telling me about these movements, but then how does this help me, or how does this affect me when using the trading system? So basically, guys, remember, our trading system gives us signals, right? It shows us when to buy, it shows us when to sell, right? It gives us the TP, it gives us the SL, you know? So now, in order to get the best trades, guys, we need to trade with the understanding, or we need to know which condition we're in. Are we in an uptrend? Are we in a downtrend? Are we in a sideways trend? Okay. So now we need to see this. Like when we're looking at the price action, like with the when we look at the signal, we can see that okay, the signal is giving us a buy trade. But now, is the condition of the market, is it an uptrend? Is it a downtrend? Or is it a sideways trend? Right? In relation to our trading system. So obviously, in if you see that the price is moving up and you get a buy signal, that gives you more confidence. If you see that the price is moving down and you get a sell signal, that gives you more confidence, right? But then if the market is moving sideways, right, it's also tradable, okay? But you need to understand that the better signals are when the market is trending, okay? And we're going to see some few examples, hopefully, when we look at the market right now, okay? But we're going to see some few examples of this, okay? So let's talk a little bit more about this sideways, this sideways trend, guys. I want to show you something as well, okay? I want to show you guys something as well because we've still got a little bit of time. We've got about 5 minutes in this class. We've got 5 minutes in this class. I don't know if I'm going to have enough time to talk about, but you guys can tell me in the chat if you want me to continue. But the actual trading day is tomorrow. So tomorrow, guys, we're not really going to be talking too much about, we're not going to be talking too much about, you know, like having a class like this. Tomorrow is basically going to be like 80% analyzing than it is going to be about actually teaching and stuff. Okay. All right. So let's go back to this situation right now. Okay. This one up here, this situation, this sideways trend. Okay. So, guys, like I said, a sideways trend happens when the market is moving in between two levels. Okay. You've got your uptrend, you've got your downtrend, and you've got your sideways trend, right? And then we know that in a sideways trend, we sell at the top of the range, we buy at the bottom of the range. Okay. But another thing you guys need to know is that um, when the market is moving sideways like this, okay, just because it's moving sideways, it doesn't mean it's going to move sideways forever. Okay, that's not what happens, right? The market doesn't move sideways forever. It doesn't happen. The market doesn't trend uptrend forever. It doesn't downtrend forever. Okay, there's a certain point where the market is going to break out of this trend. Okay, or it's going to move past this trend. Okay, so let's just make another sideways trend like this. Okay, let's just say this is our sideways trend. Okay, and then we can see that this is our resistance, this is our support. Okay, so now here's another opportunity that presents itself. Okay, so there are going to be times where the market is going to escape the top of the range. Okay, it's going to escape the top of the range. And when it makes that escape, we call this the breakout. It can either escape the top of the range or the bottom of the range. So when the market leaves the range, we call that a breakout. Okay? We call it a breakout, right? So if the market breaks out, that gives us another opportunity. So let's talk about the market breaking out of the top of the range, leaving the resistance. Okay. So if the market now moves past the resistance, okay, that gives us an opportunity to buy. All right. Because the market now isn't going to traditionally go back down than what we saw, but now the market is pushing out of the resistance, getting out of the range. And usually when it does that, it moves very quickly. So I just want to open up your eyes a bit, guys, because I know some people are probably asking me, but oh man, um, so you mean you to tell me we can't trade a range? No, ranges are actually a perfect opportunity to trade because let's say now you've got a news event, for example, right? That's coming up, and you can see that there's a potential signal on a certain currency, and you can see that this market is ranging. Okay, when the market is ranging, it's a sign that there will be a breakout opportunity soon. And breakout opportunities, when they happen, they're very quick and the market moves very, very quickly. Okay, so that gives us an opportunity to make money. Okay, okay, so what I'm talking about probably is more intermediate level type of trading. But you guys, you get it. I trust you guys, right? So when the market now breaks out of the resistance, that's when we buy. Okay. So probably maybe when we do the FOMC, we might see markets that are in a range like this. Okay. And there might be a potential breakout. So I want you guys to just make a note of this so that when we see something like this in the markets, you guys know what I'm talking about. Okay. The breakout. Okay, and then there's another situation where the market now will break out at the bottom. Okay, if the market breaks out at the bottom like this, then that's an opportunity to sell. You guys with me? I hope you guys are with me right now. I hope you guys are with me right now. Okay, so it's very important, guys, to understand the market and so that you can take advantage of what's happening. Okay, because you want to make money at the end of the day, guys. You don't want to, and you want to progress. But you see what what I'm telling you guys right now, it's very basic things, but the majority of traders don't even know what it is that I'm talking about. Okay, what it is that I'm talking about. Okay, so anyways, okay, I'm not gonna go through trading rules. We already know, guys, our trading system, how it works. Um, we buy when there's certain rules, we sell when there's certain rules. You guys know that. If you don't know the rules, just look at my other videos. You'll see what we're talking about because I feel like we're running out of time. The next thing that I want to talk about, so we spoke about the way the market moves. Now we need to talk about the trading times, or trading sessions, right? Okay, so in Forex trading, guys, there's five sessions in Forex trading. There's five sessions, right? Right? In FX. Hope you guys can see my handwriting. I'm writing with my mouse, so you guys will forgive me, okay? But of these five trading sessions, there's three main sessions, okay? All right? Maybe I should type, guys. This is I feel like you guys can't see my handwriting. Let me just type it in. Let me type it in. Let me type it in, guys. Because I can see some of you are probably like in your heads, like, man, we can't see your handwriting. Okay, so there's five sessions in Forex. Okay? And then of those five sessions, you've got three main trading sessions. Okay, these are the three main trading sessions um, where most of the volatility happens. Okay, and session number one is the session one, right? Is the Tokyo session. Tokyo session. Okay, this is sometimes referred to as the Asian session. Okay, and in the Asian session, things like JPY and AUD currency pairs are active, right? Okay, that's fair. And then session two, after the uh, Tokyo session, you've got the London session, right? You've got the London session, right? The London session. Um, this session, you can see things like what you call the Euro pairs, the GBP pairs to be active. Okay, because I know I get these questions a lot, guys, and I feel like I have to address it here. And then session three, after the London session, is the New York session, right? The New York session. This is the US session. Currently, it's usually sometimes referred to as the US session, okay? And in the US session, you look for trades on USD currency or USD based pairs, okay? So the US dollar is going to be most traded in the New York session. The Great British Pound and the Euro are going to be most active in the London session, and then the AUD and the JPY currencies are going to be active in the Asian session. Okay, it's very important to understand this. As for exact times, let me see if I can't pull up. I want to show you guys where to find the exact session times. Okay, let me see. Okay. Let me see, guys, if I can't show this on my new tab, Google Chrome. Let's see. Okay. So if you guys want to see uh, if you want to see the different trading times, you just type in Google Forex time zone converter like that, and you just press enter, and then you can click on the first one that appears, just like there. and then a new page is going to open up. Just wait, it's just refreshing. So when you get to this website, guys, you just need to make sure that you see where it says Forex time converter. You come to where it says time zone, right? And different, you have to make sure that you select the correct time zone that you're in, okay? Right now, my time zone, I'm using the Africa Johannesburg, GMT +2. Okay, so if you're in Australia or whatever other country, the times that you're going to see on this website are going to be different for you, okay? You need to convert the time to your local time, right? So, anyways, moving on, you guys can see once you've fixed your time zone converter, you can see now there's a table here at the bottom, okay? And then this table shows you the opening times and the closing times of the different sessions, okay? So if you look at the first column of the table is the Forex session, okay? The name of the Forex session, the time zone, what time it opens in accordance to my time zone, and then what time it closes, and the status right now, currently as you're on this, okay? So if we just go down a bit, we can see that the London session, okay, it opens at 9 o'clock in the morning, South African time, and then it closes at 5 p.m., right? And then right now, the status of that market is closed. That session isn't active right now, okay? Because right now, as I'm making this video, it is 1942 in South Africa. So 2 hours after this is closed, okay? So the London session is open. So the Forex session that's next is the New York session. The New York session starts at 2 p.m. South African time, and then it ends at 10 p.m. And as you guys can see, the session is open right now. It's gonna the market's gonna close in about 2 hours and 15 minutes. All right. So this is when you'd be looking for trades on the USD currencies. You'd be looking for trades on the NAS 100, the US 30, gold, etc., etc. Okay. So that session is open right now, okay? And then after the New York session, you have the Tokyo session. The Tokyo session starts at 1 a.m. and then it ends at 9 a.m. Okay? You guys see that? 1 a.m. ends at 9 a.m. So in the Tokyo session, that's when you'd primarily be looking for trades on the JPY, the AUD. So right now, when we look for opportunities. We're going to start with the USD based currencies, and then we're going to go to the USD commodities, the USD indices, and then after that, we're going to look at currencies of the AUD and the JPY. Okay, so that's how we're going to do it. You see, now we're trading with understanding. We're not just trading randomly, but we're trading with understanding. Okay. And guys, if you do have questions, just type them in the chats. If we do have time, I will attempt to answer them. But yeah, um, that's how now we see the different session times. So I think we've touched on some necessary basics. So let's just look at the charts right now. Okay. And then everything that I'm going to be analyzing right now is going to be on the it's going to be on the H4 chart, okay? So I'm going to start with the Forex majors. The Forex majors are the Euro USD, the USD CHF, USD JPY, USD CAD, AUD USD, NZD USD. So those are the ones I'm going to start looking at right now. Let's start with the Euro USD. Let's see if we've got a trade right there on the H4 chart. Right now, we don't have a trade on the H4 chart, but I want you guys to see something that you probably didn't notice. Okay, if I make a line, a support line, I want you guys to see that if you look at the H4 chart on the Euro USD, you can see that we do have some sort of range. The market is moving in between this range right here. You guys can see that. Okay, it's the conditions of the market. So when you're looking for trading signals, guys, okay, You want to see, okay, you ask yourself, is the market trending or is it in a range? Which type of trend are we in? Okay. So right now on the Euro USD, you can see that we are in a sideways trend. You guys see that? Let me show you. Today you're going to learn Forex, guys. Today you're going to learn Forex. I'm telling you right now. You are going to learn Forex today. You are learning how to trade today. You will learn today. You're going to learn today. Do you guys see that? The market is sideways. Can you guys see that right there? Right? You guys can see that. It's sideways. So always remember this when you're trading, guys. You need to ask yourself questions. Okay, is there a trend? What trend is it? Okay? Is it an uptrend? Is it a sideways trend? What trade is it? So on the Euro USD, we've got a sideways trend. What does this mean? It means that the market is moving, is not making consistent higher points and it's not making consistent lower points. Okay? It's moving in between two levels. Like right there, you can see that top level, all right, and that bottom level. Okay? So it means that the price is playing in between this type of range. So another thing you guys can do, like when you see this type of support and resistance, what you can do is, if let's say you're on the higher time frames, if you go on the lower time frames, then you know you'll probably see the trends on the lower time frames, and then you can have targets, right? You can always target the top of the range or the bottom of the range, but I think let's not confuse you guys. Let's just keep it simple for now, okay? So what else do you know about ranges? Okay, you know that the market can't range forever. Okay, and at some point the price has to break out of the top or it has to break out at the bottom. Okay, and usually breakouts happen when there are news events. Okay, and then fortunately for us, there's a news event that's going to happen tomorrow. Okay, so Euro USD is also a good opportunity for us to check tomorrow just ahead of the news event that's going to hit. Okay, so I just wanted to pause and give you guys that insight, right? So let's move on to the next one. There's no signal here on the Euro USD currently. Let's go to the USD JPY. Okay, we also currently don't have a signal here. Remember, Euro USD and USD CHF are also they move in opposite directions. So if the Euro USD is going up, the USD CHF is going down. Okay. So this market, you see this, it's in a range. Is what I was talking about. It's in a range like that. It's in a range. So it's at the bottom of the range. So this is also something we need to look at tomorrow. But don't worry, guys, we are going to be analyzing these markets. Let's look at the next one. Okay, so there's no signal right now on the Euro USD, and there's no signal right now on the USD CHF. Let's look at the GBP USD. Okay, so GBP USD, what's happening? It's also ranging. You guys see that? It's also ranging, right? It's also ranging like here. I hope you guys understand what I'm saying. You see, this market is ranging. Let's make it another color. Let's make it another color. Let's make it another color. So we need to trade smart, guys. We need to trade like we know what we're doing, right? We need to trade like we know what we're doing. You guys see that? So that blue line, you guys see that the market is currently ranging, okay? It's ranging in between these 2 points, right? It's ranging, but then the indicator is also telling us that this is a buy signal, okay? And then we already know, guys, that tomorrow we're going to have that FOMC. Obviously, this currency is going to be affected because it affects the US dollar, okay? It affects the US dollar. So right now, our trading indicator is telling us to buy where the current price is. You guys see that the market is above the 100-period moving average. The volatility meter is above 90%. So we buy this, okay? We buy there. Um, oh shit, what did I do? I did something, guys. Oh, I did a sell in it. Doesn't really matter. Don't worry about that. Let me do this. Let's make, what color is this? Let's make this green. Okay, so our next profit target on the H4 chart is TP2, and then our stop loss is down there where the system tells us. I'll make this red. I hope you guys understand. You guys are awfully quiet on the chats, but it's all right. Okay. Oh my goodness. Oh, I thought I was muted. Almost fainted, guys. Oh no. Okay, we're in. All right. So we've got a buy signal on the GBP USD, right? We buy where the market currently is. Stop loss system gave us, take profit system gave us, but it is a range. So now if we're trading smart, guys, we know that, okay, the lot size that you're going to use here, because our trading indicators a trend following system, so the lot size that we're going to use here is probably going to be a low lot size, okay, than what we'd usually do. And then because this is a H4 chart, you might find that the market might still be playing around this level by the time the news hits tomorrow. So what else we can do? What else can we do? Another thing we can do is we can put pending orders here at the top of the range. Now we're trading smart, guys. We're not trading like beginners, right? We can put, let me see, this is, what color can we make this? Let's make this all right, you see where that dashed line is, right? We can put buy pending orders at these levels, okay? Buy pending orders at these levels, buy pending orders at these levels, just like that. All right, so that when the news hits and the market now volatility goes up, it's going to trigger those buy pending orders, and then, you know, as the market goes up, it's going to be making profit. So this is a market that we need to look after tomorrow. We're going to come back before the news event hits. We're going to jump into this particular trading market. Okay, so let's just move on, guys. Guys, I'm actually feeling a bit tired right now. So we're going to look at one more currency pair. We're going to look at gold, and then we're going to look at US 30, because I feel like I've been talking forever. You know, you can't just talk non-stop. You know what I mean? So, okay, the next one that we're going to look at, okay, we're just going to look at two. Let's look at the, which one? USD CAD. Okay, USD CAD is giving us a sell signal according to our trading rules. You guys can see that. It hit TP1, it hit TP2. It's going for TP3 now, right? Oh, no, it didn't hit TP2. It's almost at TP2, right? What else do you see, guys? You mustn't be blind. I don't want you guys to be blind. What else do you see? We see what? There's a range right there. Is what I was telling you guys. There's a range right there. Uh-huh. 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 You guys see that? You guys see that? This is another opportunity. So GBP USD and USD CAD is showing us ranges. Okay. These are excellent opportunities, right? Excellent opportunities right there. Okay. Because it indicates to us that the market is going to break out of this level soon. It's going to do it, guys. It's going to do it. It can either break out to the bottom or the top. But since we've got our trading system, right, most likely it's going to break out to the bottom, okay? And then our targets are going to be TP2 and TP3, right? So as the market is going down, obviously we're going to be managing our trades, managing our profits, okay? So that is USD CAD. So let's just put a note, guys. GBP USD and USD CAD are giving us signals, but there's a range, okay? But that still is a valid trading opportunity. Are you guys with me? Hopefully you're with me. I don't know. I don't know if you're with me, right? The next one we can look at before we go to gold is which one, guys? Should we look at AUD USD or NZD USD? Let's look at NZD USD because I haven't looked at it in a while. Okay. Okay, NZD USD is giving us a buy signal. Our market hit TP1. Now it's going for TP2. You guys can see that this, according to our trading rules, this is a buy signal. What else do we see? If we look at the price action, let's just zoom in. Okay, what are we seeing? What are we seeing? What are we seeing? There's a range like this. You guys see that? There's a range like that, right? Then the market now broke out of the range. You guys see that? Okay, it's giving us, you see these ranges right here, guys. You see, it broke out of, if you guys know about trend lines, if you go into our Telegram channel, there's a book about trend lines, okay? You guys can see that the market here was moving in between this level, broke out of this trend line right there, retested it over here. Now it's going back up. So that range was broken, okay? So this is a market that we can also trade as well. We can actually put a buy right there. But obviously, we're not really going to execute right now because the market is slowing down. We're going to execute tomorrow, guys. Okay, we're going to execute tomorrow. Use the stop loss. But even now, we can go in, but obviously with the low lot size. Be smart. Be smart. Be smart. Be smart. And then obviously, as the market now progresses, we are going to add positions. Okay, you guys see that. So NZD, USD, AUD, what was it? It was GBP, USD, USD CAD, and this one. These three potential opportunity. Those that heard me heard me. Those that didn't are moving on. All right, let's move on, guys. So we're back on the another one right now. This is gold. Okay, what's happening on gold? Gold is giving us a buy signal, right? We're getting a buy signal where the market currently is right now, right? We're seeing a buy signal right there, okay? And then we're going for TP1. We're going for, there's the stop loss right there. There's TP2, all right? So gold is also a very good signal to take. Keep in mind, guys, because, I don't want you to trade blindly, right? There's probably going to be a retracement here. So if we're going to enter into this trade, we're probably going to enter with a slow lot size as well because the New York session, like I showed you, is slowing down right now. It's going to close in about 2 hours. Okay, so the volatility is going to end soon. And then now let's just do the structure analysis. You guys see that right there. The market at this point, let me put a shape. It broke the range at that blue box right there. It broke the range, and as you guys can see now, the market is going up. Okay, so we can actually take this signal, right? But obviously, like as someone who's been trading for a long time, guys, you know that gold is very, the pip value is very high. So obviously you need to trade with understanding. If you get into this buy signal, you need to be prepared for the potential pullback, right? So you can't barcode the trade now where the market currently is because first of all, the US session is about to slow down, meaning that this market's going to slow down, right? Tomorrow there's going to be the London session, okay, where the market might still pick up, right? So if we're going to enter into this trade, it's going to be have to be the smallest lot size because the market's going to slow down and the volatility probably is only going to start tomorrow. Okay, you guys with me? You guys with me? You guys aren't saying anything in the chat, guys. All right, let me just see. Okay, I see some questions. Somebody says, so for this system, we only look at the H4 and enter on the H4 as well. No, 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 no. I'm just using the H4 chart right now because of okay, I'm usually a swing trader, but you can use the 1 minute chart as well. Okay, you can use any time frame with the same rules. It's basically the same, guys. So everything that I'm telling you right now is still applicable even on the smaller time frames. Like these trends I'm talking about, these ranges that I'm talking about, you can still use it on the H1 chart. You can still use it on the 15-minute chart. You can still use it on the 5-minute chart. You can still use it on the 1 minute chart. Okay. And also, yeah, you can use it on those time frames. All right, is not only H4. Another thing that I also want you guys to see is that when we have high impact news, guys, right, we're going to use the higher time frames, okay? Because when there's news, the price respects the higher time frame levels, okay? So if there's a support and resistance level on the higher time frame, the market is going to respect that. Okay, so like because usually when there's a high impact news event, it's going to affect the it's going to go to the higher time frame level. So let's say for instance you've got support and resistance on the daily chart, and then you've got support and resistance on the 5 minute chart, for example. So when there's a news event, right, the one that the market is going to react to is the higher time frame. Okay, all right. So that's what we're going to do. All right. Okay, so there's another question. Someone says, can you show us on the 15-minute chart time frame for gold, Nasdaq, USD, JPY, GBP, USD, and Euro USD? Okay, I'm not going to do all of those, guys, because I'm really, really tired. I've been talking for about an hour, so I'm just going to look at one. Okay, I'm going to look at which one didn't I look at? I didn't look at Nasdaq 100. So let's look at Nasdaq on the 15-minute chart. Okay, so everything that I'm telling you guys, it's still applicable on the lower time frames. Okay, it's just that I prefer to trade on the higher time frames, right? All right, so let's move on. So this is the last chart that I'm going to be looking at, which is the Nas 100. Where are you? Nas 100. The request was 15-minute chart. Okay, so right now we don't have a valid signal on the 15-minute chart. Okay, we don't have a valid signal on the 15-minute chart. Why do I say so? The indicator is giving us buy levels. Okay, but remember, we only take buy signals that happen above the 100 period moving average, right? That happen above the 100 period moving average. And then the volatility meter at the bottom has to be above 70%. It has to be green and above 70% for buy signal. Okay, so right now we don't really have a trade on the 15-minute chart on Nasdaq, but what we can do is it's just that I won't have time during the London session to do a session like this, but maybe we can look at the 15-minute chart just before our news event hits so that you guys can have a better idea of what it is that I'm talking about. Okay, but yeah, I'm not shutting that idea down. It's all good. It's all good, guys, right? We still good. We still good. Okay, guys, I think we've reached the end of our training session. Okay. Okay, somebody's asking another question. You see, guys, when we do these trading sessions, okay, um, the purpose of it is to engage, right, and to get better at understanding our trading system. Okay, so I like the questions that are coming, right? So Velim Kabel is asking questions like, what do you do after executing a buy and the volatility meter changes to a sell, but the price is still above the moving average? Okay, so listen, right? The volatility meter is there to help you to get into the trade. Once the trade is in, once you've analyzed and you got a certain trading signal, for example, right? And you've got your trade open. The next thing that you need to worry about is you need to manage that trade. Okay, so if the trade goes into profit, then you can start managing the trade, because what will happen is when you must notice tomorrow, you must just watch the market. When the news event hits, you're going to see that the market is going to go crazy. The indicators are going to go crazy. They're going to go up and down on the volatility meter, right? Don't get too fixated on that. If when you're opening up the trade, the volatility meter was above 70% and you open up your trade, you've got your stop loss, take profit, the price is still above the 100 period moving average. If the trade is executed, the next thing that you need to do is you need to manage the trade. So if the trade goes into profit, then you start doing what you're supposed to do in terms of protecting your profits and such and such and such. Okay. So don't worry too much about that. As long as you got the initial setup, it's fine. You jump in, then you manage the trade. Okay? All right, guys, I'll take one more question before I disconnect. I see you guys are active today. I want that. I want that. I want that. Any other questions, guys, before I go? Just one more. So while you guys are thinking about the questions, let's just recap on what we did in terms of the analysis. We saw that the GBP USD, the US, was it the USD CHF? Those are markets tomorrow. We need to start when we do the trading session. We need to start there. Okay. If we see opportunities, we need to open up trades there. So most likely, from what I'm seeing today, right, we're probably gonna have buy signals on the GBP USD. We're probably gonna have sell signals on the. Okay, wait. I think I'm forgetting. Wait. It was buys on GBP USD, and then I think it was USD CAD, the one we were going to have sales. Okay, but you can just go back in the video. USD CAD, which was the other one, guys, that we saw? I think it was gold. Gold, we're probably going to have a buy, right? Gold, we're probably going to buy. If I have time during, because I saw that there's another news event that's going to hit at 4:30 p.m. So probably gold, we're going to be buying. USD, US 30, we're probably going to buy. NAS 100, we're probably going to buy. Which other one did we see, guys? I'm just trying to remember. But we'll see the others as we go. Okay. But yeah, guys. Anyways, thank you so much for joining this trading session. I think we've reached the end. I think we've been live for over an hour now. So tomorrow we're gonna have another session at the same time, so you guys can join up on that. And then yeah, guys, let's just connect tomorrow. And take care, guys. I'll see you guys on the next stream. Okay, so if you guys want to get this trading system, the links are in the description. You can reach me on WhatsApp, TikTok, or Instagram. Okay, and then you can also get your copy so that you can trade with us tomorrow. Okay, thank you so much, guys, for watching the video. I'll see you guys on the next one. Take care. Okay, before I go, I see someone says, I wanted a live session of you executing trades. Well, I just said we're going to have another one tomorrow because now the market is slowing down right now, guys, right? Must listen carefully to the things I'm saying, guys, so I don't have to repeat. But yeah, we're going to have another session tomorrow. Tomorrow, probably, we're going to be opening up trades. But the purpose of today was mainly 80% educational and then 20% executing and analyzing. But yeah, guys, I'll post in the Telegram if there's any changes. We might do the session an hour earlier or we might do the session an hour later. But yeah, take care, guys. I'll see you guys on the next stream. Cheers.